All right, ladies and gentlemen, I hope you had a wonderful weekend. I got another watch list for you, and this is going to be the biggest earnings season in years. Ladies and gentlemen, you got Apple, Microsoft, Google, Meta, even GM, GE, I'm telling you, 3M, you have everything, Coca-Cola, you got the big tech companies this week. Early in the morning on Tuesday, we're going to hear from everybody else, but what makes this so crazy, if you did not see Friday, we had an epic bounce. And now when we zoom out, we got to be careful because I'm telling you, even when I go over everything in this video, we've set up for this about 3 different times this month. Surprisingly, we are almost ending October, but depending on how this week turns out, it is really going to set a lot of things in motion. And again, what we came off from Friday, I got to show you. If you didn't see it, there was 2 big historic things. Number one, this one's a little historic or less historic, but Nick Timmerhouse, we've brought him up. They call him the Wall Street Journal Fed leaker. You should go follow this guy on Twitter. You should know his name because this isn't the first time we've seen it. But early in the morning on Friday, as we were in the gutter there, again, the markets weren't looking good. He came out with the tweet, and it was both good and bad because it starts off by saying how the Fed is going to raise rates again by 3/4 of a basis point here in 2 weeks. But then he said they were talking about how they could start slowing down to 50. So this is your first pivot rumor. That got things excited, but that wasn't the crazy part about Friday. What it was the Japanese yen, and there was yen intervention. Now, here's where it gets real juicy. Over the weekend, the Bank of Japan, they still did not admit to it. They said we will do whatever it takes to stop it, but they did not confirm nor deny that it was them. But like, this is a 20-day chart on the hour. It was absolutely insane. We're going to have to bring up other charts about the history, 1992, even getting into 03, 04. I'm telling you, it is pretty wild. But how this plays out until how we get the earnings this week, it is going to be wild. So we have a lot to go over. The bonds went crazy. The market went crazy. The data you get this week. Did I mention you got a bunch of economic data? You got PCE. You got GDP. Oh my God. You got PMIs. I'm telling you, it's going to be crazy. So we got a lot to talk about. I got the plays. I got the keys. Everything for this week. And then how we're coming into tomorrow. So I hope you're ready. But drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. YouTube.com/The Stock Market. It's free 99. All we ask, you're positive, respectful, and that you want to contribute. We got the news, everything that I'm telling you, the amount of data and earnings, and we are going to have all the earnings. We'll get the data within seconds, even after hours. So hopefully we see you there. And before anything, today is Sunday, tomorrow is Monday. We need your help. This is the random comment generator. We have had this for years. We started this with $500, so it is still holding up. But what we ask on this watch list, you post a random option trade, strike price, expiration date, all of that good stuff. Keep it below $100. And then tomorrow morning, we're going to do a random comment picker, pick that play, and then hopefully it does good. We got a nice call on it last week. I feel like it's going to... Let's go, baby. Run it.
Walking to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
But right off the bat, ladies and gentlemen, I didn't even give you like a weekend story. Or no, I'm just excited, bro. Last week was crazy. We didn't get anything on the butterfly, though. But right off the bat, man, like I'm telling you, the economic data and earnings this week, it is gonna be a combo. But how we start off tomorrow, I'm really thinking this is gonna be all about the momentum from Friday. Again, you had a lot of positive momentum. It wasn't really a squeeze. It was close to it, but it didn't really reflect what we had on that CPI day, and then it got really, really crazy. But we gotta watch out for that momentum tomorrow and how the yen does. How do people re-short it? Does it come back down? Do we see some of these aggressive historical moves? Again, if you don't understand what happened with the yen, people are talking either 30 or $50 billion was spent. We have zero confirmation till we hear hear from the government. But the last time the yen moved like this, literally Friday's only comparison was March 2020 after all of the currencies and the Fed intervention and all of that. So it was pretty wild. But how that momentum continues tomorrow, we saw a very big correlation with the bonds, and that is really what we're going to see. But why I'm bringing this up first is because you're not going to have any big earnings until Tuesday morning. So I'm really looking at it. Tomorrow is the setup. The real action kicks off again Tuesday morning. You're going to get General Electric. That's a big one. GM, 3M, everybody you could think of. And then even after the bell, it's like Microsoft, Google, and everybody else. And then Wednesday, again, pretty much Dow companies in the morning, big tech after hours, all the way from Tuesday until Thursday and even Friday. So that's kind of how we're watching it. But again, that momentum, the yen, and even these rumors of like a Fed pivot, whole idea is there's a lot of this momentum coming into it. So that leads to your next key. Like I already told you, Friday was one for the history books, but now we are getting closer to the end of October. So like I'm saying, with the momentum and everything going on, even the scale of what we saw with Japan on Friday, it is going to go up. I'm talking about the overall market unless something breaks from here. And that's why the earnings and the bonds are so important, because they could accomplish this. Again, you're going to be getting companies like Apple, Microsoft, Google, Amazon, Facebook. If they do bad, and if they do really, really bad, not to mention even like GE and any of these consumer-based companies, that right there may set everything off. And then people are going to say, no, that's not good. Then we actually might go back to the lows or even test a new low. But if those earnings aren't as bad, we've already seen like Tesla and a couple of other companies where it was kind of bad, but not the worst because they already adjust guidance. If it doesn't cause a Grim Reaper and does not show signs of crack or cause panic, then everything is going to be bullish. So we got to watch out for the earnings. We got to see what happens. Again, those bond yields, even on Friday, I was surprised. If the yen, if they did not intervene, it was going to be an ugly day for the 10-year. But if the bonds kind of retreat, if people kind of calm down after the earnings and it brings some relief, or again, the fact is throughout history, anytime they started to intervene back, again, after this second one now, if the dollar just calms down a little bit and if earnings gives us a reason to calm down, everything is going to be bullish. And like we're saying, the seasonality and now leading into midterms, there's a little bit of a runway unless earnings stops it this week, or maybe even the data. Again, there is going to be a lot, but it's pretty much what we're saying here. Data and earnings are going to be a killer combo. And then whatever it is, my plan is I'm just going to ride the wave until Powell. If it's good, that's going to be good until Powell. He could derail all of it. If it's bad, we're going to ride everything back down until Powell. Then maybe Powell comes in and saves the day with a pivot, or at least says, no, we're going to do 50 now. And people are like, okay, that's good. We like it. But either way, data and earnings are going to be the theme. But if you'll notice, I'm focusing a lot on this, but the last couple of weeks, like here is your multi-day chart. We have repeated and set up for this many times. This is why we've been playing both ways. We've been talking about midterm rally, both even after November and just getting ready. Again, the level of pessimism in the market, but whole point is this can all change. This is the first time now. This is the first week coming off a Monday, Tuesday move where we're actually holding up a little bit on the high side and not coming off a low into a Monday. So we're going to have to see, but earnings will really be the decider. And then it's Powell after that. So I hope you're ready, but let us get into the plays. So right off the bat, we got a bunch of different plays to go over. Even on Friday, I actually didn't make too many plays. I took praise, amen. But I took too many plays too early. I cut my Netflix, got like a $300-$400 profit, but took it way too early. The butterfly ended up expiring. I had $7,000 in the morning, but then I was down $4,000 on that big ES. It only lasted for 10 minutes. Then the rumor, then the yen intervention, market started to rally, and I cut out with like $200-$300 profit on the ES. I could have made like $1,000, but overall, it wasn't the best case scenario on both sides, but I cut out of that. But whole point is, I have a lot of the same setup coming in from Friday. I took one bad short on the MNQ we're going to go over, but I think there's going to be a wave of opportunity this week. Everything from earnings to economy. So hopefully you're ready, but let's start with the first one, baby. Meta. That is play number one. I've been talking about it. I bought it on Friday. They still didn't move as much. Even even though the market rallied on Friday, I think they still closed negative because of the whole Snap earnings. So I like them, and I just think they will be the biggest earnings mover this whole season. I do think Microsoft, Amazon, and Apple and Google will be important, but just with the whole nature of the sandbags, the Netflix, and then Meta, and then Snapchat, it's like if they do bad, this thing could drop another 20 or 30%. I wouldn't be surprised. That's if they do really, really bad. However, if they could do good and do a sandbag, I think you got 20 or 30% either or. Now, the question is, how does this price in with the options? Remember, I made an option trade on it on Friday. They're willing to move it, but it's going to be a gamble on both, I think. So I think it's going to have a lot of opportunity. And again, unless the other tech companies kind of take over and Apple does like really bad, I think this is going to be the key. And now you're going to have Google leading into them on Tuesday. So Google reports first. They're very similar to Meta, and then Meta is going to come in on Wednesday. So we've already seen the sympathy moves. If you've already seen earnings, you know how it is. So keep that in mind. But that is play number one. I'm still holding my 50 shares and we're up. So we're going to ride those out. But play number two now, I hope you're going to be happy to hear this. I don't know, but BP, baby, the oil play. So that January play, I've held it for a couple months now. Surprisingly, that play is down 50% because BP has not moved. My Conoco, that play is up 1,000% and still holding. So very interesting. But with that being said, I am really, really liking BP. They even got a recommendation from Barron's over the weekend about kind of the new things that they're getting into and how they don't see it kind of, or they see it stopping any of the negative effects that they've been dealing with. So I like it, but the premiums are down. I'm going to be looking at January premiums. Those are the ones that we're holding. I believe the 39 calls. I'm either considering going closer to the money, or I'm also thinking just calling shares or getting shares and calling it a day. But either way, I like it, especially with everything with oil and all that. And a lot of people are calling for oil after midterm. So we're going to see what happens. But that is play number two. Keep your eyes out for them. And then finally, play number three, man. I'm actually kind of really liking this to the upside, if and only if we get a lot of good rally to, this week and the earnings confirm it. But they can do their own thing. But Alibaba, ladies and gentlemen, like I'm saying, if earnings confirm that rally, they have been the biggest leader. I think they're going to do good. Again, even last week, they got pummeled after a lot of banks were getting bullish on them. So maybe it's just going to be a delayed reaction. Maybe they flushed a little bit. But overall, I'm thinking if we get any sort of rally here, if the optimism continues, I am really, really going to be liking some of those China plays. So watch out for them. That is play number three. But those are the main plays. As far as everything else, like I said, it wasn't much. I closed out of my MNQ I had to the long. Remember, I was down on that. I closed it for a $150 loss, and I actually went short. And that was, like, honestly, even on the butterfly play, like, that play frustrated me the most because now I'm holding that one down 500, and now it's downside. So that one was awful, but still holding that coming in there. Then I closed out of Netflix too early. Then the ES, again, we held it for most of the day. As the butterfly started to dwindle, I made back my profit on that one. Again, I was down $3,000 on this big one in the morning, made it back up, went up to like $200-300 net. And my idea was there was enough time left. So I was like, hey, let me close that, take the profit. If it does sell off into the end of the day, I could get it on the butterfly, but it kept going and I missed out. So wasn't too bad. I left money on the table, but whole overall strategy, the butterfly was free. Found out ways we could do it better. But again, overall, we let that one sit there for the last couple months and it did its job, but didn't have to pay any premium. But I'm really, really excited because we are probably going to do a couple more of those. But that was pretty much everything as far as what I'm holding. Again, now most of the downside we have is the pound play, the MNQ that I don't like, and then the MYM. Remember, this one is from months ago, so we could take some of these losses, and again, still holding the UNG and all of that one there. But really now we are holding a bunch of different upsides. This isn't all of the plays because now I got a bunch of different ones, but pretty much now if we get a big rally, I might just start to close out a lot of the downside, ride some of the upside here until we get into POW, and then hopefully be able to take some of the profits here on the up. But as you see, 6B in the pound still down on that. The ES, those are the option trades. The MNQ, that one was the bad one on Friday. The MYM, we're going to see what we could do with that one. But again, depending on how it plays out with some of the bigger ones, feeling pretty confident with the upside that we have. The ACAM, again, this one is a huge position. We're back up to positive, and if we do get that rally there, the Disney, the Google, and then we cut out of the Netflix, and I still have like NVIDIA and a couple of other others, even like Arch, Adobe, and then UNG would be the only things that are like commodity related. And then again, downside MNQ, MYM, and then 6B if you want to consider the pound. So it's going to be pretty wild. We're going to see. I like how I'm positioned. We got a lot of cash to move this week, and that's what I'm probably going to do. It's going to be about doing the timing, so I'm going to make sure I do not take things too early, because that's definitely something I'm seeing that I could improve on here. So I'm excited for all of it. Going to be watching all those plays that I told you this week, riding with the earnings. So Chad, I hope you're ready. I hope you're locked in. But that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to understand the difference between the battle and the war. This is what you've been going through. This is what you've been doing leading into the end of this year and even getting you ready for next year. I'm telling you, Chad, do not get frustrated. You got to take them as they come. They're both the good and the bad. I hope you see the opportunity in front of you. And remember that the hunt is what makes you into the beast, baby. So, Chad, I hope you're ready. This week is going to be insane. Again, you already know it. We love earnings. Even if the market wasn't like this, you are living in the middle of history. I'm telling you, all you got to do is get through it. If you've already made it this far, Chad, I'll tell you, we can see the shore. You just got to keep going, but make sure you got this stamina. Stay locked and loaded. Control all the emotions. Everything what it is. Again, battle, war, battle, war. There's something bigger at play, and Chad, we've made it this far. This week of earnings will be amazing, and get ready for Powell and everything else. I hope you're ready, and God bless the positivity. Are you ready? I'm gonna wake up early. I'm telling you, don't worry. We're gonna set the alarm. It's Monday. We relax. I hope you brought out that beast mode and then Zen mode. You know what? It was Zen mode the last 2 days. Now it's beast. See, I can still do Zen mode. You know what I'm saying? So, amen. God bless you. You're blessed, Chad. I love you. God bless. I'm praying for you. You know, it's prayer day, too. Amen. Stop playing finger to the sky. Goodbye.